Andy, you're seeing the order flow on a day-to-day basis. What's happening with silver in particular? And recent with last week or two, sales up, down, strong. What's that phone doing on the hook? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on a rather hot and steamy day down here in Mexico. But hey, when you get a message from Rob Kientz, legendary investor, financial educator of Gold Silver Pros, and he says he's coming down to Puerto Vallarta this Sunday to help test out all the resorts for quality control, water slide, pool access, buffet food. Um, these are the sacrifices I make for the show and the audience. I love you all. And with that said, let's get right into this week's physical silver market update. We have Andy Schectman, long timer from Miles Franklin, joining us in the upper left corner, I believe is going to show up as. Andy, how are you today?
Good to see you all, guys. I'm doing well, Chris, Rafi, and the crew, and Rob. Good to see you.
Auditor Rob Kientz of goldsilverpros.com, referenced in today's introduction. How are you, sir?
I'm doing very well. Couldn't be better.
Well, I'm excited to see you in a couple of days. Now, Andy, is your dog excited about Rafi's appearance or Rob's appearance? I can understand. Rafi, it'd be great if you were making an appearance, although I hear you will be hopefully making it to Silverfest in October season. Is that right?
I'll try.
All right. I like the confidence. Just go easy on the Halloween costumes. We don't want everyone dressing up like a central banker, which would clearly be too scary if there are children involved at the party. So with that said, Andy, you're seeing the order flow on a day-to-day basis. What's happening with silver in particular? And recent with last week or two, sales up, down, strong. What's that phone doing on the hook?
Yeah, it's been quiet. They call it the summer doldrums. It's more quiet now than it's really been in the past 18 months, at least over the last week or two. Since July 4th, it's kind of been in a holding pattern where similarly we're in a holding or a range bound pattern with silver. So it's been a little bit slower. Premiums have come down, and that's something that I'm happy to see. We saw something similar to this in 2020, and it reversed course very quickly later on in the summer. But I'll simply say right now, from a standpoint of value above spot price, it's the best entry point I've seen probably in the past 15 plus months. So a little slower, premiums have come down. Summer doldrums, typically when you hit anywhere near Labor Day towards the end of next month, things start to dramatically pick up. At least they always have. That's been my experience. So right now, Chris, it's a good opportunity to swoop back in at a price that's stupid low, and premiums that have come back a little bit, given a better value.
Especially if you've been setting up things so you can start taking delivery of COMEX contracts and then mint those into your own products, would make it an excellent time, as we've been discussing. And people will see in an episode that will be airing shortly. Great reason to hit the subscribe button and the notification bell. Andy, one other question for you, though. I got a viewer asking about the buybacks. You and I have been talking about it a lot, and certainly I was thinking about it the other day. It's like, let's say someone does see that the Biden administration's economic plan is hyperinflation, and they say, all right, I get this silver thing makes sense, but they see $26 on the COMEX. They call a silver dealer, and it's like $30 to start. Then some of them actually buy silver. An inflation print gets 5.5%, and the thing gets clobbered. Now, half of that, with the banks and the clobbering, we're doing what we can on that as well. But I guess in there, the question is that someone was asking about the buyback prices. The spreads are so wide. And I can understand for someone new to the market, it's not the greatest first impression. So what could you say there? And certainly you can talk about any of the things we've been discussing to help mitigate the way the situation is now. But what could you say about that?
You shared that email with me, and the gentleman who wrote that to you did have some valid points. This is an industry where the retail companies are not making big premiums. It's if you're making 1.5% or 2% on a small order and 1% or much less on a large order, you're doing well. When we sell them back, some of it we can buy ourselves and turn around and offer and maybe pay a tighter spread. But if I'm selling it to the industry, where it's something called the certified exchange, where there's 1,500 companies that make a market within this industry, those people need to make money too. So they're going to bid back a bit. But let me just phrase it another way. Anyone who would have bought Silver Eagles from me prior to COVID would have paid $3 over spot. You try to sell them back to me in March of the following year, just a couple of months later. Let's say you bought it November or December of 2019, you try to sell them back February, March, April, May, June, anytime 2020, or even up till 2021, you're going to get $7+ over. So you're going to get 2.5 times the premium you paid for them. Look, the premium bid and ask is typically in this industry 2-3%. The one thing I disagreed with what the gentleman sent is that you get spot and dealers bid spot for anything that they sell. And really, that's not true. In fact, even 1 ounce rounds or 100-ounce bars, I'm bidding above spot. In this industry, if your spreads are that wide, you're not competitive. And while there is a spread, and it's going to be 2, 3, 4%, depending upon what you bought and how much you bought and when you buy it. If you're just static and not saying anything changes, in a market like this where it's quiet right now, those spreads are going to widen a little bit. But in a market like we've seen over the last year, it's funny because no one was ever selling, and people only look to sell when it's a little bit quieter and maybe they're a little more keenly interested in it. But I'll tell you that over the last year, the spreads have been really narrow, a lot more narrow than I'm used to seeing. And I guess you get what you pay for. If you want to have physical possession of something, there are costs involved, and costs involved in every step of the way, from the fabrication to the minting to the mailing to the advertising to the storage, to everything has costs involved with it, and that bears out in the bid ask spread. And this is one of the reasons that we've talked about doing this 1,000-ounce bar contract retrieval or taking a possession or distribution off the COMEX, for this reason, to see just how tight we can actually make it from $26 silver to what's the end cost. But I guess the bottom line is simply that if you want the real thing, there are costs involved, and premium has a life unto its own, one that's very difficult to try to explain to people, because how do you explain a $3 premium in November and a $10 premium 3 months later? It's just basic supply and demand. The more people that get involved in this, the tighter those supplies are going to get. The quieter the market gets, the wider they'll get.
Can I make a comment on that?
Sure.
Please.
Although, Rob, while you do that, Andy, perhaps if you could look up any of your current bids on any, whether American Eagles or just a couple of products, and share that after Rob is done, that would be great.
Yeah, so one comment I wanted to make, I was involved in real estate for 18 years. I ran 2 different companies that invested, rehabbed properties and rented properties. And anytime you deal with any physical asset, there are a lot of costs. Ask anybody that hires a real estate agent or buys and sells real estate. You're going to pay usually on acquiring and getting rid of a property at least 10%, both sides of this transaction, at least 6 to 10% on both sides of that transaction. So any physical asset of value that has had value over time is going to cost you a lot of money. I think people have largely been spoiled by the passive investment market and the low cost trades that you see on Schwab and and other networks like that, E-Trade, because the way they make their money is not on the trades, it's not on physical transaction, it's in bidding up the asset prices. And I would also warn people that when you get into some of these markets that have maybe a little bit cheaper premium and trade prices, you're getting into markets where you're the one being taken advantage of. You're the one that's being put into the Ponzi scheme, where long-term you're not going to have that value. Things that tend to have less value tend to have less fees in terms of holding it, transferring it, so on and so forth. They make it attractive on purpose. They want to get you into it. But those are very high risk assets. So yeah, you may pay a little bit less to get in and out of a stock position, but the amount of counterparty risk you're taking is tremendous compared to other physical assets like farmland, gold, silver, rental properties, things like that. So speaking from experience, the gold market is no worse than the real estate market. And I tend to think that there's less counterparty risk on gold and silver than there is even on real estate, because in real estate, you have to do you have to deal with local politicians, you have to deal with taxes, and you have to deal with things like eminent domain. So, yeah, there is a cost for distributing, buying, and selling precious metals, but you're not in it to trade. I mean, if you're in to trade precious metals, you're probably going to lose anyway. The value in precious metals is long term. And so those transaction costs really aren't substantial when you consider long-term ownership. And if people are going to complain about that, then I would like to see, how they reacted when they had to pay the real estate bill when they bought and sold their house.
At 7% on a real estate transaction, that's 3 transactions in precious metals. I mean, so that's a very good point, Rob. And
yeah.
And also is a good point is that if you're going to buy metal with the intention of turning around and selling it quick, buy an ETF, buy something else. You're right. Those are 2 really, really great points. And so I guess it's a situation where there's a lot involved in taking possession of physical metal and buying it and distributing it and shipping it and insuring it and hedging it, and all of those things have costs. So just to give you an idea, Chris, to your point, Silver Eagle, the bid on type 1s is $7 over spot. You're going to pay 10.5 to $11 to buy them. That's a pretty big spread, as big as I've seen in a long time, actually, for a Silver Eagle, because most of my career, it would have been, the bid would have been $2.45 and you would have paid $3. 60, but now, which is about 2% most of the time when you figure silver, you're not even 1.5 to 2%. The spreads are bigger, and they have been bigger. And one of the reasons also is that the dealers don't know when they're going to get more product, and no one's selling anyway. So look, way around it. I will tell you this, that any of your listeners that want to buy silver, and they contact me, I will personally guarantee they get the best price in America. I will personally do that. And that's as good as I can do. But there are costs when I have to go out and buy this stuff. There are costs, and so it's getting more expensive to run this kind of a business these days. Let alone all us companies, for the most part, give free shipping, and shipping has gotten more expensive, and insurance has gotten more expensive, and there are costs involved that people are just looking too much black and white. There's a lot of gray in between. The companies that are out there, JM, SD, APMEX, ourselves, we're all good companies, and we're honorable and fair, and the spread is what the spread is. The more interest in this market we see, the tighter those will get. And for people who buy from us, Chris, we don't even charge buyback commissions. So we're giving them what is in essence the highest bid price in the country, and we'll always continue to do that. But to his point, yeah, they're higher than I've seen in quite some time. And I don't know exactly why that is, but they're high. They've come down a bit lately, but for most of my career, those spreads are never any more than 2 to 2.5% ever. They're a little bit higher now.
Well, fortunately, one of the exciting things about today's marketplace is that we have, in addition to the industry veterans like yourself, Andrew, we have the young bucks on the scene like Rafi Farber. And Rafi, along with Rob and I and a couple others, have been discussing ways that some of these spreads can be tightened to provide a better customer experience on all sides of the transaction. Rafi, can you share what you've come across so far and you're thinking about this?
All right, talking about our attempt to get a COMEX contract delivered.
I think that's part of it, and but anything else in terms of, we've looked into options for cutting bars into chunks, melting them down. Anything else or conceivable things that other people could look into that might help narrow these spreads?
Well, yeah. First thing I'll talk about is we're trying to get a contract delivered, 5,000 ounces. If we want to take that spot price seriously, the one that we always look at when we're tracking the price, the COMEX price, then let's try to get it and resell it. Maybe drain the COMEX coins or some kind of gimmick like that. Should be fun. And if we can get a bunch of people, attacking the COMEX, really narrow these spreads for everybody, and that's what we're trying to do. Put out the Put out the SOS.
Let me make
whatever
one
you call
comment
it.
here, Chris. Let me just log on here. I'm logging on. This is going to remain nameless, but this is one of the biggest distributors in North America, maybe the biggest. And right now, if I want to, let me just do the numbers here. Let's go to silver. I'll give you an example. So this is before I make any money. The premiums are coming from the very, very, very big distributors, the ones who are taking the majority of the big risks, the ones that are spending 50, 100 million, several hundred million to buy product, to stock it, and to send it out to the companies who have lines of credit with them, like myself. If I want to try to find a silver eagle here and tell you without giving anyone's name, the silver, we'll use a 1 ounce silver bar. Their 1 ounce silver bars, to me, before any money is made, are going to cost roughly $3 over the price of silver right now, before any money. And if I want to sell it back to them, the bid price is $1.25. So if I have to buy it for $3 and sell it back for $1.25, that's before a retail company makes any money whatsoever. They're the ones setting the price. They're the ones making the spread. So I think people should be less angry at the retail companies and look to the big primary distributors out there, and that they're the ones setting the price industry-wide. It's not companies like Miles Franklin or JM or SD or Atmex, if that helps at all. Because right here on a 1 ounce bar, there's a $2.20 or a $2 spread basically between buy and sell before any money's made.
That makes sense.
Well, let's
And
not get angry at anybody, no?
as Rafi the Wise clearly points out what's important. Rafi, I agree with what you're saying. No need to get angry. I mean, we're competing against Keynesians, so I mean, it's always a winnable game if we remain calm and don't let the Dennis Rodmans get to us. Rafi, the last question I would leave you with today is that, do you think that if we get the economics in place to take delivery of COMEX contracts and melt them into 1, 10, and 100 ounce goldsilverpros.com bars, that the demand for that would single-handedly end the COMEX in a matter of moments?
Maybe milliseconds. I think moments is a little too conservative.
I couldn't agree
But-
more. Andy, any comment on that one?
No, I think it's the most exciting thing that we've done as a group here, and I'm very excited to do it. And we have recently purchased the same machinery that Pamp Swiss uses to make their bars, and we will be able to by September. We get the stuff in August, and it's several machines, and we need to learn how to use it and how to ramp it up. But we will be able to make 10 ounce and kilo bars right away, and we also just bought a machine that will allow us to produce rounds. So I'm all for it. Let's drain the COMEX with as many deliveries as we can. Let's start making bars and rounds, and one by one, ounce by ounce, take a chip out of the COMEX, and that's how you make a difference, little by little, one by one. And I think it's fantastic and very, very exciting.
Rob, I'll leave the last question with you. How does it feel to have reached the stature where putting your logo on silver bars could conceivably end the Western Wall Street Ponzi scheme system of finance?
So yeah, happy to be a part of it. And if our logo and our brand can help spread the word on precious metals ownership, I'm more than happy to get involved in that. I think you and I have been doing this now for a couple of years, Chris, and we've made a big impact. But any way in which we can help that community grow and provide value to that community, I'm 100% on board with that.
Well, it's interesting. I mean, certainly I'm here in Mexico, the silver capital of the world. And when you think about the improvement in quality of living that the Mexican people could experience, in addition to the true constitutional free market patriots in the United States, Rob, one could really say that you're more like an international legend than just one country alone. So certainly I'm quite grateful to have you here on the show. And with that said, we'll wrap up for today, folks. But Rob of goldsilverpros.com, the man who saved well, I guess since everyone's hedged to the dollar, I mean, saved the global economy just with his logo on silver. Rafi Farber, the wise of the Endgame Investor. And Rafi, where do people find the new YouTube channel, homie?
My YouTube channel is my name, Rafi Farber. Go and subscribe. I've got I got one doodle video up. I'm in the middle of writing another script now of how gold and silver manipulation works. Trying to make every video funny and informative. And enjoy.
Well, I was watching your first video last night. I love the name of the channel, Rafi Farber. It's clear, it's simple, it's direct. I don't know how you came up with that, but Andy, any final parting thoughts before we wrap up here today?
Yeah, no, I just echo what you're saying. Whenever I have a problem that I can't find the answer to quickly, Rob is the first person I text, and he usually gets right back to me.
I thought you were going to echo what I was saying about the brilliance of the channel name, but
well, you know,
Rob
the bottom line is I'm
too.
just thrilled to be part of this movement, and I think it's really a phenomenal idea, Chris. One of your best. I've never met anyone that's got more ideas than you do, but this one to me takes the cake. It's as good as it gets. Can't wait for Silverfest, and count me in. I'll book my ticket tonight, even if you give me the exact dates. I'll be there. And
October 26th at 6 p.m. is when the kickoff reception with silver celebrities like yourself begins. So if somebody wants to have a Sambuca with Silver Bill Murphy, or a glass of wine with Rob Kientz or Andy Schectman, maybe a nice little snack with Rafi Farber there as well, as we get him tunneled out of Israel for a couple days of freedom in Mexico. So I will look forward to seeing all of you there. And thanks for joining us today for this week's Physical Silver Market Update with Andy Schectman, Rob Kientz, and Rafi Farber. Hit the share button so all of your friends can know. Get some silver for themselves before it's too late. And I will see you again soon.